Now, we've had kind of a crazy couple weeks here when you're looking at the stock market. What exactly do you think is going on here? And leading up to this big jobs report on Friday, what are you expecting?
Well, what's going on is there's been an obvious change in investor and trader behavior between 2013 and 2014. 2013, it was all about watching the Fed, listening to the latest Fed president give a speech, really picking apart and disseminating what they came out with their statement from their meetings. But in 2014, now that we know that the Fed will well and truly get out of the way, at least part of the way, if not all the way in 2014, now it's back to the fundamentals. And when you start looking at the fundamentals, that's a much more intricate picture, a larger mosaic than just looking at the Fed and listening to what ex-chairman Bernanke was saying. And the picture again is very complex. You've got flames that are being fanned in the emerging markets with those currencies now that stimulus, hot money from the U.S. is coming out of it. You've got an earnings picture which is somewhat muddled. You find a lot of companies beating on the bottom line, but there's a large majority of companies, high-profile companies, that are missing on the top line and warning going forward. So you have those sorts of things buffeting the market. And once you are at an all-time high and people realize that there's not a constant bid in the market from the Fed, then you're going to have this kind of movement and volatility. You saw the VIX spike up above 20. It's come back a little bit today, but a VIX over 20 implies that over the next 30 days we're going to have volatility of about 5 to 6% either way. So look for that. Look for more of that to come in the next 3 months.
Now, moving over to earnings, a big one we do have this week coming out on Wednesday is Twitter. Now, it did have its IPO in November here on the floor of the New York Stock Exchange. When you have a company like that, and this is their first ever earnings report, what do you focus on? And since it's a social media company, we have had the Facebooks, the LinkedIns like that. Is it all about mobile ad growth as well?
It will be for them. So Twitter's a company that it's two things with them. Number one is what does their usage base looks like? Has the IPO promoted them to a level where suddenly there's more and more people that are getting on Twitter? We find Twitter is starting to get a lot of the younger set. Facebook is losing them and Twitter is picking them up. Seems to be more in line with their attention span, 140 characters and off you go. So we're going to be looking at what their usage base is. We're going to be looking at what they're doing in the mobile space, how much of the advert revenue is coming from that. And more importantly, Twitter will be given a honeymoon, so to speak, for a few quarters, as long as they're taking that revenue and reinvesting it in the platform to produce cash-generating, revenue-generating types of services later on. What are they doing in the business space? So those are the types of things that we'll be looking for from the Twitter report.
And finally, we are also getting earnings from GM this week as well. Now, its last earnings report, it did offset those losses in Europe. When it comes to an auto giant like that, what are you looking for now?
For me, the big picture with GM is the North American business has righted itself. It's doing very well. I mean, the good thing about GM, one of the great things about GM and the bailout they got from the U.S. government that's not talked about was it not only saved jobs, but it also gave them a lot of room to go in and retool a lot of their models. So they came out with a lot of new fresh models in North America for 2014, the 2014 model year. And they're going to be doing the same thing in Europe and Asia. Now the big thing with GM that I'm really looking at is the luxury car market in China is booming because of the boom that's going on there with personal finance. They just got approval at the end of 2013 to build a $1 billion plant that can pump out about 150,000 Cadillacs a day. So that will help them compete a lot more with Volkswagen's Audi unit, which became the largest car seller in China last year, because then they won't have to pay the high tariffs for bringing the automobiles in from the United States. So they'll be able to build them inside of China, they'll be able to produce them, they'll be able to sell them, they should be able to compete. And what GM is looking for is very rapidly, probably by about 2016 or so, becoming the largest car producer and seller inside of China. And of course we know that's just a massive market. Europe, again, the car market in Europe is coming back, so hopefully they'll be able to capitalize on that. Still a long road to go there, but GM is doing very well, and a lot of that has to do with the redesign and the promotion of their new models.